Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, daily chart of the ES, and yesterday was an interesting day in that we got up to that 32 half level that a lot of people have been looking at, and we couldn't get through. We pulled back, got through 25, but we just couldn't convert 23 and hold it down underneath that 23. So it's bounced back. It's done, it's done over 30 again in the pre-market. So, for everybody that thought, yesterday was absolutely the end, it may be, but what's the test that we're looking for? I talk about it every day. Don't come to me about a pullback until the day's trading takes out the previous day's low, because we did a lot yesterday, but we did not take out the prior day low. Prior day low, 17. We traded as low as 20. So what's the trick today? Take out 20. Now you can see it kind of starting to set up. We're trading 16.25. Market doesn't like over 30 right now. So if we can go down and break 20, then that's a big check mark in the bullish side of the column, or the bearish side of the column, rather. You'd like to see it hold underneath there if you're a bear. If we go down and make another morning dip and go back up and make new highs, if we get back over the high from yesterday, if we get over the 32 quarter, then you've just got another dip, and that opens up another touch of the upper Bollinger Band. So nobody really has an advantage right now. The baseline advantage always goes to the bulls. Why? That's why. Okay? Lower left, upper right, unrelenting. At the same time, we are getting to distances between price and the 200-day exponential moving average, which can barely stay on my screen there, down at 1479, which are extremely stretched. At the same time, we are not particularly stretched when it comes to the 45-day pivot. The 45-day pivot sits at 1596, and that is only 36 handles from peak price, and that's a neutral reading on my stuff. But the ability today to go down and break that 20 will start to get this chart to roll over a little bit. And we're seeing weakness in gold today. We're seeing weakness in oil. So you're starting to see the makings of potentially a little bit of a pullback. Is it the pullback? I don't know. And I don't think anybody knows. This sure felt like the pullback when we did 1593 down to 1530, but you know what? It was just a move from the third standard deviation upper band to the lower band. Okay? A pullback, quote unquote, is going to ride the lower band like this price here is riding the upper band. It's going to last a long time, and it's going to hurt a lot of longs. That hasn't happened. That hasn't happened all year long. You had this little blip, bounced, blip, and bounce, blip, and bounce. So, we may get some relief, but I wouldn't get excited about any really long-term bear stuff until we have the ability to convert, a couple of these moving averages and ride the lower Bollinger Band. So the benefit of the doubt now goes to the bulls. But the bears have a really good chance today to take out 20 and start a little bit of a relief move back down towards 1585 and the middle Bollinger Band. Okay, everybody have a great trading day. Have a fantastic weekend. Mike Vacchi, PrincetonTrader.com. I'll be back Monday morning with another webcast. Trade them well, everybody.